Good evening, all. In this video, we'll be discussing various accounting entries that are generated out of RAR engine. So the scenario is like this: with Airtel subscription of 500 rupees, the customer has an option of purchasing a landline device. SSP is 900, however, he is getting it just 600. So this is the scenario. We'll see this in SAP. So what we are initially going to do, since this is optional, we'll initially think that the customer would only pay for this Airtel subscription, and since he is only paying for Airtel subscription, it will only have one line item at the order and only one POB at the RAR contract as well. And since there is only one POB at RAR, there won't be any allocation, and whatever is the amount, which is 500, it will be allocated for the 12 months equally. So this is how the revenue schedule will be for the first scenario. So we'll see this in system. VS01, let's create an order. Take this material, give quantity 1, rate as 500. Save it. Order is created. Here we have only taken subscription. Since we have given customer an option of whether to buy or not, in this case, we assume that the customer hasn't purchased it. Now process this through Raymond to generate a RAR contract. This is a RAR contract. Click on it. It will have obviously only one performance application, since in order itself we've given only one material, right? So only one POB is created. Its contractual price is 500, and then there is no allocation. It's completely taken. In this case, there is no billing done. However, the revenue will be recognized. So to do that, now that we have seen, if you can see here, it says it is recognized but not completely posted. So to post the journal entries, we have to run the 3-step postings. For that, we need a RAC contract. Yeah. So here we have to do, this is the first step of 3 steps. First, in this, here we give company code, accounting principal, we give our fiscal year, and then we give our period, which is 8th August, give the RAC number, and then execute it. This is done. Now you have to go to the second step again. You have to give the company code, give the period, RAC. Here date you have to give a date in the August itself, preferably end of the month. Execute it. Now the third step. Execute it. Now if you see, there is an accounting entry generated. Take the number. And once it is generated, you would have to go to now FP03 to see the journal entry. So if you see here, the entry is unbilled AR account data. This is debit, and then revenue account credit. There will be some adjustment entries generated, but this is about these are just clearing accounts. The effective entry is unbilled AR account data to revenue account. So if you see this account, this plus minus, and this the net effect is 0. The total entry is unbilled AR account data to revenue account, and this is matching with our working here at our Excel sheet. So unbilled AR account data to revenue account.